if we're learning to trade well, we should never be drowning in red ink. There should never be a loss even close to 50%. And that risk management is one of the most important skills that traders need to learn early. Unfortunately, many traders, beginning traders, they get excited and they want to make money, and they take more risk and more risk and more risk, and then they blow up. And that is not sustainable. So the key to success is learning how to lose the right way.
Welcome to Traders of the World, the only show fluent in the native tongue of the market. Join me, Flavio Lemos, on Traders of the World as we decode the global conversation. Stop guessing, start understanding. All right, team, before we dive in, as we get started with today's very special interview, if you find value in what you hear, please help our channel grow by hitting liking, subscribing, and sharing your key takeaways in the comments. Your engagement makes a real difference. So, traders, welcome back. If you watch the TV show Billions, you know Wendy Rhoades, the high-performance coach at X Capital, who keeps the billionaires from losing their minds. If you like comics, you know Professor Javier, the telepath who can rewire the human brain to control fear. Well, today's guest is the real-life hybrid of both. But unlike Wendy, he doesn't work for a fictional hedge fund. He coaches the biggest real-world prop firms and portfolio managers on the planet. And unlike Professor X, he doesn't need superpowers, just data, psychology, and a radical honesty. He's the author of the Trader's Bible, The Psychology of Trading, and the Daily Trading Coach. Here, he believes you already have the seed of success inside you, even if you are currently blowing up your account. He's a husband, a father, a lover of rescue cats, and the man who taught the street how to fake. Dr. Brett Steenbarger, welcome to the show. Do you charge by the hour or by the pip?
Very, very good, Flavio. I appreciate the wonderful introduction. Yes, Wendy Rhoades is much better looking than I am. But my work as a psychologist is to help traders with their performance and sometimes with their personal lives as well. And so I'm excited to be with you and share some ideas about how traders can find success.
So here's the plan. Grab your coffee, make it a double, and focus, because today's episode is going to challenge everything you know about your mind. Strap in, because right after the intro, we are going to open the Pandora's box of Dr. Brett's mind, where the best loser takes it all. You can't afford to miss it. Don't go anywhere.
You ever wondered what truly connects traders from Tokyo to London to New York? You just need to learn the language. That language is technical analysis. Understand its signals, and you'll understand the world. Welcome to Traders of the World. Here we skip the jargon and just figure it out together.
Thank you, Dr. Brett. Thank you for coming. Your time too. Dr. Brett, you started in clinical psychology and psychiatry. Usually, psychologists listen to people talk about their mothers. How did you go from traditional therapy to the high-stakes, adrenaline-fueled world of trading? Was the stock market just the biggest asylum you could find? A lot of crazy people.
Yes, well, I've been involved in financial markets since the late 1970s. So I've been involved in trading for quite a while and have had that interest. But my main work for many, many years was at a medical school in Syracuse, New York, and helping the students there with their performance. The students there were medical students, and students in other healthcare professions. And these were people who were bright, who did not have huge problems, but who had a lot of demands on them because of their education and because of their personal lives. And so I learned to apply psychology to healthy people. The psychology that I did for many, many, many years at the medical school was really what I call therapy for the mentally well. I'm helping people who are healthy, but who want to become even more, do even more. So actually, it's not that big a jump to go from that kind of work to working with traders and portfolio managers in the financial markets. These are healthy people, bright people, who have a lot of demands on them, and they're trying to perform as best as possible under conditions of stress and under conditions of uncertainty. And my interest is applying what's called evidence-based psychology, research-based psychology, to performance issues.
I have to ask about a specific blog post you wrote called After a Devastating Trading Loss. You detailed a specific Friday in the 80s where you lost a massive amount of money shorting the S&P futures. You said you felt numb. Can you take us back to that moment? What did that pain teach you that a textbook never could?
Yes. There's a quote from the philosopher Friedrich Nietzsche: "That which does not kill us makes us stronger." And, I took a big loss in 1982. I was short the S&P. And if you look at a chart of the market in 1982, sure enough, it was going down, down, down. And in fact, it had been weak for a couple of years. But then in August of 82, there was a tremendous rally. And I missed that. And right away, my profits were gone and I dealt with a large loss. It wasn't that I lost so much money. I was still able to live, but I lost the hope. I lost the dream that I was going to be able to trade full-time and support myself full-time. I realized I still had a lot to learn. And in fact, looking back on that market in 1982, knowing what I know now, that was a turn in the market I should have been able to catch. But back then, I wasn't able to. And so the big loss was a wake-up call. And it was a wake-up call to step back from trading, develop myself, and come back to markets in a new way. And I was able to do that. And that was actually my first coaching of trading, was coaching myself and getting past that difficult loss.
You have said that every trader already has the seed of success inside them. That's beautiful, but for the guy listening who just lost 50% of his account, it feels like that seed is already dead. How do we find that unique strength when we are drowning in red P&L?
It's a great question. And really, I have two different answers to that. The first one is that if we're learning to trade well, we should never be drowning in red ink. There should never be a loss even close to 50%. And that risk management is one of the most important skills that traders need to learn early. Unfortunately, many traders, beginning traders, they get excited and they want to make money, and they take more risk and more risk and more risk, and then they blow up. And that is not sustainable. So the key to success is learning how, and every trade we make is a bet. And we have to decide how much we're going to bet, because some of our bets are going to be right and some of our bets are going to be wrong. And we have to be able to survive several bets in a row that don't work for us. So that's the first part. The psychology of trading is, for a developing trader, is a bit like the psychology of starting out in a sport. If you're learning a new sport, if you're learning football, you don't start out right away going on the field with professionals and getting yourself hurt. You learn the basic skills and then you build from there and you get the proper coaching. And in trading, it's the same way. You learn by following markets, trading markets on paper, trading markets with small size, learning to do the right things, and building your confidence, building your skills. That's the most important thing.
You specialize in brief psychotherapies. In trading, we don't have 10 years to fix our childhood trauma. The market opens at 9:30 a.m. So how does your solution-focused approach differ from traditional therapy for a trader in a slump?
Yes, good question, and a good way to put the question. I do have a book coming out at the end of this month called Positive Trading Psychology.
Show us. Okay.
Yeah, and it does take what's called a solution-focused approach to working on our trading. A solution-focused approach means we build upon our strengths. We figure out what we do well. In other words, we study our winning trades, not just our losing trades. Yes, it's important to learn about our losing trades and improve, but what do we do well as traders? What are our talents? The abilities we're born with. What are our skills that we've developed during our life? How can we apply our talents and our skills to specific trading strategies? So in a solution-focused approach, we focus on what did you do right? And what does that say about you? And how can we do more of what works?
I see. Your book, The Daily Trading Coach, this one here, is famous for its 101 lessons. The premise is basically teaching us to be our own therapists, so we don't need you anymore.
That's right. That's exactly right.
If you could only pick one lesson from those 101 for a struggling trader to read today, which one is the game changer?
Wow. But let me get to your earlier point. The whole goal of what I do, and the whole goal, I believe, of trading psychology is that people should learn to coach themselves. I often joke with people that my goal is to get fired, because it's like being a parent, right? I have 5 kids. The goal is 5 kids, yeah.
No TV at home at all, no TV.
The goal is for them to be able to lead their own lives, not to rely on you like they did when they were 5 years old. And it's that way with coaching in trading as well. As far as one big lesson, I would say that all of us have what are called signature strengths. All of us have skills and abilities, talents that are unique to us. This is a very important concept. If you are going to be successful as a trader, you're going to build upon, you're going to leverage skills and talents that have made you successful in some other area of life. In other words, the skills and talents that made me successful as a psychologist, as a therapist, are the very skills and talents that are part of my best trading. Because when I'm a really good trader, I don't get these ideas about getting long and getting short and being in this market or that market. When I'm a really good trader, I sit and I listen and I listen and I listen, and the market talks to me. The market says what it's doing. And at some point, a light bulb goes off. At some point, I figure out this is what the market is doing, and here's how I can participate. That's exactly the same skill I use as a therapist. We all bring our patterns of success to our work as traders. The approach that you take as a successful trader is going to be related to how you've been successful in other parts of your life.
Well, when you're talking about this, I remember my wife, she always says, here, listen to me, and she's talking, and I don't listen at all.
Right. Yeah, that's a good tradition for husbands often. But in a good relationship, yes, we have to listen. We have to hear. We have to understand. It could be a relationship in therapy. It could be a relationship with our children, with our spouse. But also, we have a relationship with the markets. And we have to be able to listen to them and follow what they're telling us.
In Trading Psychology 2.0, you moved the conversation forward. It wasn't just about controlling emotions anymore. It was about leveraging them. Why is emotional discipline often a trap? And how should we actually use our emotion as data?
Yes, our emotions are information. They tell us something. What has happened in traditional trading psychology is that there has been a focus on negative emotions. So we have to work on our fear, we have to work on our greed, we have to work on our FOMO. And yes, that's part of it. But having less fear or having less greed is not going to make us very successful. We have to build on positives, not just eliminate or reduce the negatives. And so, for instance, in Trading Psychology 2.0, one of the things I talk about quite a bit is creativity. The really good traders who I've worked with see markets in new ways, in different ways. And they put information together in different ways. And they can see opportunities that other people don't see. That's being creative. We can learn to be creative. And we can develop processes that make us creative. That's an application of trading psychology that's very different from just working on our negatives.
People forget that you are also an active researcher of patterns. You don't just look at brains, you look at charts also. Can you walk us through your specific process when analyzing the market? Do you look at breadth, volume? Give us a Steenbarger setup example, please.
Oh, I'll give an example. Okay. Every single day within the US stock market, I look at the breadth of the overall market. How many stocks are up on the day? How many stocks are down on the day? How many stocks are making new highs? How many are making new lows? And I look at how many stocks are making new highs or lows over a 3-day period, a 5-day period, a 10-day period, a 20-day period, a 50-day period. So I look at many different time frames for the overall market. But then I do that for each of the market sectors as well. Technology stocks, energy stocks, communication stocks, healthcare stocks. I look at the breadth within each sector. Now, if I see expanding breadth across all the sectors, what is that telling me? It tells me that the big institutions, the big investors are putting new money to work in the market. And I want to be long. Other times I'll see, like right now, I'll see that certain sectors are really strong in their breadth, like energy stocks. And other sectors are pretty weak, like consumer discretionary. That's telling me that the big institutions, the big traders, are taking money out of one part of the market and putting it into another. It's called sector rotation. And you trade a rotational market differently than a trending market. So by looking at breadth, I can see what the big players are doing, and I can follow their path.
You have a deep interest in using historical patterns to find a trading edge. How do you balance the quant side of your brain, the data, with the psych side, the intuition? Do they ever fight each other?
Yeah, and they don't always give the same message. It's a very good question. Yeah, there's the logical aspect and the psychological aspect, right? And, you know, I look at historical patterns. So let's say that the market right now is making new highs, but many individual stocks are making new monthly lows. That actually has been happening recently in the US market. I look at all examples in history, you know, over the last, let's say 20 plus years. I look at all the occasions in history when that has occurred. And then in the past, what has happened going forward? What has happened over the next week, the next month, etc. So I'm looking to see if the patterns that are happening now have some kind of edge based on market history. But, and this is a very important point, the quantitative work gives a hypothesis, not a conclusion. In other words, my hypothesis is, okay, 8 out of 10 previous occasions, the market has gone down when we've had a lot of stocks making new highs, but also a lot making new lows. 8 out of 10 times, my hypothesis is this market is going to be weak. But then, like I was mentioning earlier, I have to listen and listen and listen and listen to the market to see if that is actually happening. If I see today that the market is trying to go higher and can't go higher, and certain parts of the market are going down, I might say to myself, the history is repeating itself, and I can put on a short position. But if we got huge strength, maybe because of some news, obviously that history is not so relevant. So it gives me an idea, it gives me a hypothesis, but you don't want that to become a fixed conclusion in your head.
You have done extensive work with Bellafiore and SMB Capital. You have seen hundreds of new traders, maybe thousands, come through those doors. What's the #1 trait that separates the guy who gets fired in month 3 from the guy who becomes a shark?
Okay, well, Shark is certainly one of the top traders there. Yes, and I have certainly been privileged to work with SMB over many years. I would say, looking at the best traders there, that they have an unusual combination of qualities. The ability to take a good amount of risk when they see an idea clearly, to go for it, combined with very careful and cautious risk management. So they're quick to see when there's an opportunity, and they're quick to see when they're wrong. And that gives them a great balance between the big winners and keeping the losers small. I'll mention one other thing, Flavio, about SMB. I believe, and I've said this before, I believe that a large part of their success is understanding what to trade, not just how to trade. They look at stocks that they call in play, stocks that are moving, that have momentum. And it might be on the upside, it might be on the downside. But they're looking for movement. They're looking to capture that movement. And they're very good at that. They have screening tools, software that helps them identify what's moving, what's in play. And I believe that a big part of the success is trading the right things, not just trading them the right way.
We are seeing the AI and algos dominate. Does this change the psychology of the human trader? Do we need to be smarter, or do we just need to be better at managing our robot overlords?
Yes, markets have been computerized and algorithmic now for a while. And with AI, that's just continuing. And so over time, we can expect that markets will become more and more efficient. And that means that we have to become better and better and better and better at finding opportunity. I think also where some of the day trading firms have been successful is that they are trading markets that are smaller than the ones that the big institutions emphasize. So if I'm trading a low float stock, a stock that's a small company, the big asset managers, the big hedge funds can't trade those. They have too much capital. And so those tend to be less efficient, and those provide more opportunity, and they're a little bit safer from all the algorithms and the AI patterns.
Let's talk about your new book. Your bio mentions a new focus on performance, psychology, and spirituality. That's a twist. Are we talking about meditation or something deeper? How does the spiritual health of a trader impact their P&L?
Yes, this is a topic I've been interested in for a while, and I do believe that our beliefs and our work on ourselves in a religious way, in a spiritual way, does affect our growth, our development, and ultimately that can affect our trading. One of the spiritual lessons that all of the major religions emphasize, and I have a blog book, it's a book in blog form on my website on TraderFeed, traderfeed.blogspot.com. It's called Radical Renewal. If people Google Radical Renewal, they'll be able to see that. It's free. And I talk about that here as well as in the new book. What the religions have in common and the spiritual traditions is a focus on repentance. All of us do wrong. All of us are fallible. Sometimes we hurt people. Sometimes we hurt ourselves. Sometimes we hurt our trading accounts. And every major spiritual tradition has a way of seeking forgiveness and coming to terms with what we've done wrong. I believe that that is very relevant to traders, that if we can find a way to learn from our mistakes, then that frees us up to grow and become all that we can.
You list curiosity as a superpower. Many traders treat trading like a factory job. Press the button, get the money. Why do you believe treating trading as an entrepreneurial venture driven by curiosity is safer than just following the rules?
Yes. Again, a very good question. It's something in the new book that I talk about a good amount. If markets were always the same, then we could always do the same thing and make money. That would be great. Markets are always changing. Sometimes they're volatile, sometimes they're not volatile. Sometimes they're rising, sometimes they're falling. Sometimes they're just choppy in a range. Markets are always doing different things. And so we have to adapt. We can't do the same thing over and over and over and over again and hope to succeed. So that ability to adapt is what requires the curiosity, that we learn from what's happening in the world, we learn from what's happening in markets, and we figure out patterns and new patterns that are occurring, and that allows us to adapt to the market changes.
Your bio says you have a lively household with 4 rescued cats. Be honest, Doc. Be honest, Doc. Who has better risk management, the cats or the hedge fund manager you coach?
The cats are perfect. You know, they're very talented. Yes, yeah. One of the activities that I've had for years and years has been adopting cats who've needed a home. My wife, Margie, grew up with cats in her childhood. And when I first met her, she had a cat, and it was the first cat I had ever been part of. And since then, we ended up adopting many different cats. And we have 4 of them now. And some of them have been handicapped. Some of them have been mistreated. And providing them with a good home is rewarding. The connection between the cats and the traders is that when I work with a trader professionally, I adopt them. Many times they're hurt, just like the cat was hurt. And I adopt them. I take responsibility for them. I bond with them. I try to help them through whatever pain they're going through to be flourishing, to flourish, to be successful. And so I like to adopt. I like to adopt cats. I like to adopt traders. And 2 of my children are adopted. And so that's something that has been very rewarding for me over the years.
So talking about this, for the trader, listen right now, who is considering quitting, who feels they just don't have it, what is the first step to rebuilding the confidence and everything? Is it a break, or is it a smaller size, or is it looking in the mirror?
This is a tough question.
That's why I ask you.
I thought you were going to give me easy questions. Come on, Flavio. Sometimes a trader gets the idea that they should quit, and they should quit. Trading is not for everyone. Being a psychologist is not for everyone. Being in sports is not for everyone. And if you have tried and tried and tried and tried different things in different ways, and it's not working for you and it's making you unhappy, maybe it isn't the right thing for you. I only work with people in professional money management settings. I don't work with individual traders professionally. I help them out with the website and all that sort of stuff, but I don't work with them in a professional way, and certainly don't take any money from them. And that gives me the freedom to say what I believe. And others who are trying to sell their services, they can't tell you that trading is not for you because they want you to buy their product. But it's not for everyone. And that's true of all performance activities, sports, being a professional actor or actress, professional musician. It's not for everyone. So we need to be honest with ourselves. We need to try different things in different ways. We need to make sure that we're making use of our skills, making use of our talents in what we're doing, and see if that's successful for us.
Well, my trombone teacher always tells me that please don't quit, don't quit, don't quit. You are terrible, but you are getting better. You improve. So I'm a little bit stubborn and resilient, and I believe in him. And I'm playing trombone for 2 years already and giving concerts. So
that's nice.
You need to be resilient too, no?
Yes. And the key, Flavio, in what you're saying is that you're seeing progress.
Oh, yeah.
And if you are trading and you're doing the right things and you're seeing progress, yes, by all means, stick with it. See what you're doing best. And that's where this positive trading psychology comes in. See where your success has been coming from and do more and more and more of the things that have made you successful. But I have people who contact me who have been trying trading for years, and they're miserable. They've lost a huge amount of money. They're not improving. And that doesn't mean they're bad people. It doesn't mean they're failures. It might mean that trading is not for them, and there might be something else in life that could make them very successful. That certainly has been true for me. You know, I enjoyed trading. I stopped for a while in 1982, like I mentioned, but I continued trading when I was in graduate school, and I trade now. But I know that's not my greatest skill. I know that what's most meaningful to me, what I do best, is working with people. And so I enjoy trading, and I do that as an activity, but I don't try to make it more than it really can be for me.
Dr. Brett, this is our signature question, the one who the audience lives for. We know about your 80s loss, but looking back at your entire career, coaching or trading, what was your best call, best trade, a moment where you saved a trade or nailed a market move? And on the flip side, what was your worst call, a mistake that still makes you cringe?
Yeah, the 1982 experience was my worst. And it was my worst because I was overconfident and took too much risk. I didn't take profits. I wasn't really seeing that the market was actually getting stronger, even though it was going down in terms of price. And that was far and away my greatest loss, both in terms of capital, in terms of money, but also psychologically, my greatest loss. My greatest win, interestingly, also came during a big market decline. The markets declined quite a bit between the year 2000 and 2003. And this time I did catch that even though they were going down, they were getting stronger as we were going into that 2003 period. And I bought, but I was too early. But I used options to hedge my trade. So I was long the stock market, and I was also long quite a bit of put options.
Put option, okay.
The market went down even more in March of 2003, and my stock market position lost money, but the options made a lot of money. And I've always considered that my best trade, because I was able to learn from the past, and I was able to make money even when I was wrong. And so it showed that I had matured as a trader. That, to me, was my best trade.
Doc, you have a backstage pass to the minds of the biggest portfolio managers in the game. You hear things the rest of us don't. Right now, look at the current market. Where are these guys seeing the real juice? Is everyone just peeling into the same AI trade like teenagers at a Taylor Swift concert? Or are you seeing the smart money sniffing out opportunities in place the retail crowd is completely ignoring it?
Yes, again, a good question. I think we're seeing strength in certain sectors of the stock market that many people I speak with think will continue through this year. It's not just the technology stocks, the AI companies, but it's all of the companies that develop the resources for the AI industry. So for instance, raw materials companies have been doing quite well because there are many raw materials that are needed for the development of the chips that go into the AI. We are seeing unusual strength in those commodity-related sectors. Now, on top of that, we have a situation where the leader of the United States very explicitly is interested in lower interest rates and stimulating the economy. Now, if that ends up being successful, we could have more and more and more money going into the market and going into these very hot areas, and that could create quite a bull market. Now, some people I speak with believe it could also create inflation, and that would be a problem for the value of the US dollar, and that would be a problem for bonds, for treasury bonds, fixed income instruments. So it's a scenario that could lead to some boom, but the boom might not be everywhere. It might be in certain areas because of what's going on now, and it might lead to some problems later on. So these are some of the thoughts that are on the radar for people I speak with.
On the flip side, let's talk about the fear factor. We retail traders lose sleep over a bad entry, but the guys managing billions. What is the monster under their bed right now? When you walk into these hedge funds, is the vibe party like 1999? Or is there a specific risk, whether it's rates, geopolitics, or valuations, that's making them sweat through their expensive suits?
I'm not sure that the people I speak with are sweating a whole lot right now. What they fear is a situation where markets become very volatile, very uncertain, and because that interferes with their risk management. In the old days, when I first started working at hedge funds, portfolio managers were allowed to lose a lot more money than they're allowed to lose now. And so if you have a portfolio manager who's not allowed to lose much money and markets become volatile, suddenly they become day traders. The markets move as much in a day or two as they might in a week or more. And so that's a situation that concerns them, that they're fearful of. The individual traders are in a different position. They do not run big portfolios. A portfolio manager has many different ideas, many different positions. And so there's balance in what they're doing. The individual trader is doing one trade at a time, typically, especially day traders. And so for them, one of the real risks is when opportunity shifts from one area to another area, and they're looking for opportunities where there's no opportunity. And they refer to that as getting chopped up. That's the hardest scenario for them.
If you could teleport back to 1982, when you had that loss,
yeah,
and give young Brett just one piece of technical advice and one piece of psychological advice, what would they be?
Wow. Back then, I didn't know what I didn't know. The important information that I look at now, some technical information, the breadth information, I didn't know any of that back then. And so I would have patted myself on the back and said, you're still a beginner. There's a lot you don't know. Keep your bets small. You have
Life is a marathon. Life is a marathon.
Yes. Yeah, I think that would be the guidance that I would give myself back then.
Dr. Brett, this was a masterclass. You are the Yoda of the trading world, and I think everyone listening just saved about $5,000 in therapy bills. But for our audience who wants to learn more from you, where are the best places to find your work, your website, books, social media, and your course?
Yeah, thank you. Yes, so my blog is called TraderFeed, TraderFeed, TraderFeed.blogspot.com. If you Google TraderFeed, you'll see it. And I post just about every day something about trading, something about markets, something about trading psychology. So that's the first place. If someone goes into the Amazon site, they'll see the different books that I've written. Yes, and there are different books for different interests, and so Daily Trading Coach is certainly one of them. The one that's coming out at the end of this month is Positive Trading Psychology. And so those are places where I've really developed ideas and go into a lot more detail than I can in a blog. And then I have an active account on X, Twitter, and people can follow me there. My handle is Steenbab, STEENBAB.
So, Dr. Brett, the Yoda master the art of trading. This has been a true masterclass in derivatives and discipline. Thank you for your generosity, your time, your books, and for helping us find that seed of success.
Thank you so much for having me, Flavio. I appreciate it.
That's a wrap for Traders of the World. Go read the Daily Trading Coach, please. Pet a cat and manage your risk. See you next time. Thank you very much, everybody. Bye-bye.